Do I need life insurance in retirement? A lot of people have that question and don't really know exactly what the answer is. Most assume no, but let's answer it here and see what the impacts are of having it and not having it can do. I'm Derek Mazzarella with Gateway Financial Partners. Let's dive into it. All right, so we have our fake clients, Pat and Sam. We both have them planning to live to 90 at the moment. Right now, Pat makes more money or made more money because her Social Security payments are around 30,000 and Sam's is around 24,000. So before we get into killing one of them off, let's look at what this does. So currently, almost half of their income is coming up from stable sources. So basically, Social Security, because we know Social Security payments going to keep coming in no matter what. Hopefully, as long as the taxes go through, and the rest of it is coming from their retirement savings, IRAs, things like that. Okay, so if we take Pat and say, okay, instead of dying at 90, what happens if she passes away at 75? As you see here, her success rate for retirement drops from 82 to 77. Not a whole game changer, but what happens to their consistent income? So they had about half of their income coming from Social Security and retirement. Now Sam's only going to have about a little over a third of it coming from Social Security. So that puts a little bit more pressure on his assets, or the remaining assets, to create income for him. And there's a little bit of a ripple effect with this. So, like most people, Sam had saved his money into a pre-tax retirement vehicle like a traditional 401k or a traditional IRA. And when they take distributions in retirement, 100% of those distributions are deemed as taxable income. Social Security, on the other hand, at their income level, 85% of their Social Security income is taxable. So there's a 15% gap there that wasn't taxable that now will be taxable. So if we look at what's going on with their retirement here from a tax standpoint, they actually end up paying about almost $70,000 more in taxes just because one person passed away. So that shows a little bit of how the extra changes in taxes can impact your retirement. All right, so what would happen if we added some life insurance cover? So let's look at adding another $250,000 life insurance policy would help them out. Okay, so they go from a 77% success rate to a 90% success rate. So as you'll see here, the cost of the premiums didn't really hurt them from a payment standpoint, but having the life insurance greatly increased their success rate of their plan. So for these people, these fake people, life insurance actually did increase their success rate, and it did impact them. Because one of the things that we have to realize is we buy life insurance when we're working because if one of us passed away, we lose an income source. The same thing can still happen in retirement, especially if you're more reliant on your Social Security. Then I'd lean more into needing life insurance in retirement. As always, it's going to be an individual situation, but yours can be very similar to what Pat and Sam here are experiencing. So I'm Derek Mazzarella. If you like the video, please like and subscribe. And this is also close to a chapter in my book, Chapter 9 of Just Retire Already. You may want to check it out and see if you can learn a little bit more about how this works and could potentially impact you and your retirement.